Hey everyone, welcome back to Corporate Decoder, the place where we unravel the mysteries hidden within corporate filings. Today we're looking at Diameter Credit Company, and let's just say they've been busy raising some serious cash. But here is the interesting part: they decided to do it in a way that most companies shy away from. Diameter Credit Company has dropped a report detailing the sale of unregistered equity securities on the 17th of September. 2025. This means they sold shares of their company, but not through the usual public routes like the stock market, which usually requires a lot more paperwork and transparency. So what exactly happened on the 17th of September 2025? Diameter Credit Company issued common shares of beneficial interest. That's just a fancy way of saying they sold ownership stakes in their company. They sold a whopping 4,769,430.21 of these shares. Now, this wasn't a donation. In exchange for these shares, they collected a substantial amount of money, $132,189,571.07. That's over $132 million. Talk about a cash infusion. The company states that this sale was exempt from the usual registration rules under the Securities Act of 1933. They're relying on a specific rule, Section 4(a)(2) and Regulation D, which often apply to private placements where shares are sold to a limited number of sophisticated investors who are deemed capable of assessing the risks involved without the full public disclosure. Essentially, they're saying these sales were private deals, not meant for the general public, and who is orchestrating these significant financial moves based on the filing Vishal Sheth, the Chief Financial Officer, signed off on this report on the 23rd of September 2025. It's always good to know who is accountable when such large transactions occur. Looking at this filing, the core story is about Diameter Credit Company raising a considerable amount of capital through a private sale of its stock. This is a common strategy for companies to quickly secure funds without the lengthy and costly process of a public offering. However, the fact that they're an emerging growth company and are electing not to use the extended transition period for adopting new or revised financial accounting standards suggests they are aiming to present financial information in line with current standards, which could imply a desire for more robust financial reporting as they potentially look towards future public market activities or simply want to maintain a high standard of financial practice. Now, what does this all mean in the grand scheme of things for Diameter Credit Company? By raising over $132 million in a single transaction, they are signaling a strong need for capital, likely to fuel growth initiatives, expansion, or perhaps to manage existing debt or operations. While private sales offer speed and flexibility, they typically come with less transparency and can sometimes be seen as a signal that the company isn't yet ready or willing to face the scrutiny of a public listing. However, for an emerging growth company, this is a significant step in their financial journey. The key question is how they plan to deploy these funds to generate returns and create value for their investors. The strategy behind this massive private placement will be crucial to watch. Will it lead to significant expansion, new product development, or acquisitions, or is it to shore up existing operations? Without more context, it is hard to say definitively, but the sheer scale of the capital raised indicates ambitious plans or significant needs. Overall, Diameter Credit Company is making a bold move to secure substantial funding through a private placement. While this offers immediate financial benefits, the long-term success will hinge on how effectively these funds are utilized, and whether the company continues on a path that might eventually lead to greater public visibility or continued private growth. It's a move that speaks to both opportunity and the inherent risks of ambitious expansion. Alright, that's our breakdown of Diameter Credit Company's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.